CNBC Crypto World. Signature Crypto Bank plummets as SVP and Silvergate encounter issues. Bitcoin declines by 2%. Bitcoin briefly drops below $20,000 when officials shut down Silicon Valley Bank. The collapse of Silvergate Exchange Network would disrupt the crypto economy, warn JP Morgan analysts. All of the latest accusations made against the biggest cryptocurrency exchange on the planet are addressed by Binance's Patrick Hillman. Welcome to Altcoin Heroes, your most reliable source of cryptocurrency news and predictions. Feel free to subscribe to the channel. We'll upload videos about the latest news, trends, and predictions in crypto. Don't forget to click the notification bell so you won't be missing out or left behind and be updated. Just last week, the prices of Bitcoin and Ether noticeably declined. After hitting a low price of under $20,000 for Bitcoin, it fluctuated over 2% just above $20,000. Ether also experienced a significant decline, dropping over 2.5% just above $1,400. These actions occurred during a larger US equity sell-off that was sparked by the no longer operating Silicon Valley Bank. Prices were also impacted by conflicting February job reports. Let's now discuss the major headlines. The double-digit decline in the price of shares of the crypto bank Signature exceeds the losses experienced by Bitcoin. In the middle of a sell-off in bank stocks that lasted for a second day, that stock fell as much as 32% and was briefly suspended. The incident actually came after last week's previous notification that Silvergate would liquidate. As SVP was shut down by financial regulators, losses got worse. Although Signature claims to have little exposure to cryptocurrencies, investors have fled from the stock due to the high level of uncertainty in the financial services industry. Later, a JP Morgan analyst issues a warning that Silvergate Bank's downfall and the termination of the Silvergate Exchange Network marked yet another loss for the cryptocurrency sector. Silvergate announced the termination of SEN about a week ago. SEN allowed instantaneous transactions between investors and cryptocurrency exchanges as opposed to standard bank wires, which may take days to complete. This report, which was published recently, indicated that Silvergate Bank, which JP Morgan referred to as a significant intermediary of the cryptocurrency ecosystem, suffered as a result of the FTX collapse and the failure of other crypto businesses since then. The bank noted that recent rapid deposit withdrawals had a negative impact on Silvergate. According to an analyst, Silvergate served as a gateway for more than 1,000 institutional participants in the cryptocurrency market, including major crypto exchanges, miners, stablecoin issuers, market makers, and managers of digital asset funds who used its network to send fiat currency between their Silvergate accounts and the accounts of other Silvergate customers. The analysts went on to say it's going to be difficult to replace this immediate network for processing dollar transactions among participants in the cryptocurrency market, given the current ecosystem, the general unwillingness of conventional banking to operate with crypto companies in the wake of the FTX collapse, and given high regulatory pressures. Moreover, the New York Attorney General classified Ether as a security, classifying it alongside assets like stocks and bonds, and escalating concerns of a broader regulatory intervention. Ether was referred to as a security in a statement made public just last week by Letitia James in her lawsuit against KuCoin for not registering with the government prior to allowing cryptocurrency transactions on its platform. Regulators and the digital asset market dispute whether or not to classify cryptocurrencies as securities, which would lead them to more stringent regulation. After the report, Ether dropped to its lowest point in 2 months. Now, onto the main topic. Binance, the largest cryptocurrency exchange in the world by volume, has been making news lately. The crypto exchange was recently accused of having far closer ties to its American entity than had been previously noted. According to a Wall Street Journal report, Chinese developers of Binance were allegedly in charge of maintaining the software codes underlying the digital wallets used by US customers of Binance, potentially granting Binance access to US consumer data. Now, I know this is an exciting update, but before that, I just wanted to let you know that I would greatly appreciate it if you guys clicked on the like button and press the bell over there to turn on your notifications. Done? Alright then, let's continue. Patrick Hillman, Chief Strategy Officer at Binance, was interviewed by CNBC to respond to all the latest claims regarding that the Wall Street Journal claimed that Binance and Binance US are more interconnected than they actually have declared, mixing staff and funds and sharing an affiliated entity that traded digital assets. In response, a representative for Binance emphasized that the two are different legal organizations. Hillman then, in response to the allegation, stated that these entities are separate, just to be transparent and prevent confusion. There have been rumors in the past that the manner in which it was put up was an attempt to get around regulations. It is impossible to avoid regulation. You will be held accountable if you have customers in the US market. Hence, for Binance, you must obtain licenses once KYC has been enabled, and you have a better understanding of where your users are, and you must be able to submit those regulations in order to obtain licenses in the US. Due to its rapid growth over the past 2 years and its extremely complicated governance structure, Binance has spent the last several years working to totally take shape. Also, getting such licenses would have taken a lot of time for Binance.com. This is why CZ, the owner of Binance, made the decision to establish his own distinct company in the US, jointly with the two major US law firms. Some internal project managers from Binance.com were employed by him as consultants to aid with the infrastructure setup for Binance US. They used to offer this service, which they continue to offer now, in which they assist in setting up other exchanges and essentially whitelisting their backend system. The Wall Street Journal was specifically looking into that and observing communication. That was merely a certain type of consultation service. This is something that many exchanges undertake, nothing unusual about that. The companies are therefore completely distinct from one another. After that, Hillman was questioned regarding the Wall Street Journal's claim that Binance devised a strategy to avoid the prospect of being investigated by US authorities as it launched its US company in 2019. However, executives from Binance cautioned that any legal action taken by US regulators will have, quote, nuclear fallout on the company's operations and its officers. Hillman responded by saying that an outside consultant had proposed a plan that they had initially considered to be a wise course of action. The lawyers who were assisting in the establishment of Binance US were shown that proposal, and they responded that there was no way that it could function as well in the US market. That's why it was dropped right away. Naturally, you want to comply with regulations if you don't want to go afoul of US regulators. He believes that there has been a misunderstanding regarding Binance and other exchanges' views on the function of regulations. Regulations are beneficial to the sector. He is aware that it might be hard to understand for some people, especially those who got into cryptocurrency very early. But sensible regulations will aid in fostering user confidence and attracting the first billion users. Users won't feel secure entering the market unless we have truly sensible regulations and really clear regulations. Hillman was then questioned if he believes Binance would survive the current regulatory crackdown by global regulators and whether he is willing to pay fines to atone for prior regulatory offenses. In response, Hillman stated that they are ready to handle any corrective actions that authorities deem appropriate. That is a consequence of operating in a sector with strict regulations. These kinds of regulatory measures have also been brought against conventional banks this year, including Goldman Sachs, Deutsche Bank, and HSBC. This isn't a particularly unusual or crypto-related issue. Hence, they are ready to take whatever steps are necessary to ensure that regulators continue to have faith in their platform and that US regulators are aware that they are still acting morally. 2 years ago, they were an entirely different company. They have radically altered their investment strategy, compliance investment strategy, and system development strategy. In addition to 80 former very senior federal law enforcement officials from the US, Europe, IRS, and the SEC, they now employ over 750 compliance officers worldwide. The company has therefore earned a lot of trust from authorities today. All that's left is for them to make up for the flaws they experienced during their first 2 years of business. Hillman was finally questioned over this claim. A group of US senators accused Binance this month of being a quote, hotbed for illegal financial activity, and they demanded details from Binance and its US partner regarding their financial situation and regulatory compliance. Hillman responded by saying that they will unquestionably comply with the USD senators' requests and give them the information they requested. If you search for illegal transactions in cryptocurrency, you can see them. For example, if this wallet engaged with the other wallet that has been marked illegal, then perhaps this wallet is also unlawful, which allows you to trace down entire criminal organizations. The ability to carry out this sort of law enforcement activity would require years, if not decades, in the conventional banking system, making cryptocurrency one of the most effective platforms that law enforcement has ever had. They see that illegal funds as a fraction of total volume are decreasing over time in cryptocurrencies, because it's a terrible space to try and conduct business since you can run on the blockchain, but you can't hide. You will get detected. They recently assisted and aided a major DEA cartel bust in Mexico, and once the DEA was able to pinpoint one wallet, their detectives would be able to collaborate with the DEA to locate the entire network of cartel-owned wallets and halt their operations overnight. With a closed system such as traditional finances, which operate in a black box, that kind of law enforcement action is not feasible. They believe this to be a feature rather than a bug. Sadly, that is something that a large portion of the fact many people do not fully understand. Now, let us know what you think. Leave your comments below. We appreciate you for staying till the end. Kindly click the like, subscribe, and notification bell icons if you enjoyed this video. Visit our channel for more coin predictions, Bitcoin, altcoins, and cryptocurrency videos. Have a great day, and see you in our next video.